Welcome to Friday's Market Wrap-Up here at Top Gun Options. Matthew Buckley, my call sign is Wiz. And for those of you who couldn't attend yesterday's training session after the close, here is the replay. It is posted. You can head to go.topgunoptions.com/FT-replay. That stands for full throttle, FT-replay. And you can take a look at my changing strategic mindset from neutral to bearish. And you can also take a look at the bear call spread, the SPX 2410 at 2415 out to the regular May expiration. That is already up $600 since I got filled at the open this morning. So $600 before lunch. Pretty good return on a trade. So if you didn't get a chance to attend, like I said, just head over to go.topgunoptions.com/FT-replay, and you can click on this blue button right here, and it'll take you to the full throttle page where you can pick your track, either defensive, offensive, or the max afterburner, either annual or a monthly membership. And I showed you, folks, how this week alone with our 2 weekly options trades, we've more than paid for an annual max afterburner slot. And last week as well, we had 3 shots, 3 kills on our weekly options program for nearly a $5,000 profit last week. So we've been having an absolute blast, folks, trading this market. And I'm telling you, we're heading to the downside here. I think we're heading down to the 50-day. Biggest news today. Let's just hit it. Blistering jobs report, pretty good jobs report. 211,000 jobs in April. The forecast was 194, so that was a beat. Look at the paltry. What was that? January, February, March numbers. Look at that, 79,000. The 98,000 was an embarrassment enough. Look at that, 79,000. That's a pretty big revision to the downside, but we're really shrugging that off. Looking at the 211. Here's the fly in the ointment, or the black fly in your Chardonnay. The 0.3 average hourly earnings, flat. So we might be adding jobs, but people aren't making more money. Overall unemployment rate ticked down, but here's still the April jobs. It's all about minimum wage again. So, I don't begrudge a housekeeper, McDonald's, whatever it is, leisure and hospitality, education, healthcare services, and temp help. Those are the top 3 where the jobs were. Obviously, great, people have a job, but it's not the quote quality jobs that are really going to start powering this economy. So good headline number, but when you dig into it, it's still a little soft. Companies, now that we're more or less out of the earnings season, we nailed it, folks. I said this will be the best earnings season in the past 5 or 6 years, and there it is right in the journal. They said 5 years. Awesome. Companies are racking up profits, but they're not really spending them. One of the reasons they're racking up profits, and we talked about this with ExxonMobil's earnings right here in the journal, it's because companies have really trimmed their sales for bad economic conditions, which is great because when the winds start to pick up like they have, so your sales are rigged for super fast if you've really optimized your company, your employees, your systems for bad times. So, but they're kind of sitting on their cash, and instead of reinvesting it, buying back shares or buying the competition or hiring more people or doing more exploration work, they're kind of sitting on the cash. So that's not necessarily a bullish thing for the economy. Oil, we have to start taking a look at again. It's popping back up on the radar. Sub 50 is not good, and mid 40s is definitely not good. People really were accepting that 50 was the floor. Now that's changing. 50 is becoming the ceiling again, which is not good. We saw the volatility for the last January, February's, or actually December into January's, and everybody remember what happened in the stock market when oil imploded. Stock market's going to implode, so we need to keep an eye on that. And then obviously we need to keep an eye. He accused the CIA today of an attempted chemical attack to take him out. The North Korea thing is still out there. It's bubbling. It's going to come to a head. And like we've talked about all week with the VIX down here, I also covered in the live trade brief yesterday, bullish double vertical on VXX. There's something on the right side of this chart that is going to happen to freak the market the hell out. There's a lot more downside risk than there is upside potential in this market, in my opinion. That's why I changed my strategic mindset from neutral to bearish. Okay, there's just no catalyst to get up here. This is the hope and change rally. This rally, which we've traded the hell out of it and seen some great profits, was built on hope. Now we're waiting for the change. This is all, third time is the charm with healthcare. Yay. I mean, come on, man. And that does not bode well for tax reform. So the market's just feeling heavy here. We're way over our ski tips. We're out of earnings season. Oil's an issue. We have world events on the stage. I just don't. Not feeling the love. Doesn't matter though. As an options trader, we can potentially make money whether the market's going up, down, or sideways. Perfect example with this bear call. I really think that 2,400 level is going to be resistance for the time being, and we're going to head back down to the 50-day moving average. Okay. So like I said, go to go.topgunoptions.com/ft-replay. You can watch the replay from yesterday where I cover all this, my strategic mindset, my operational mindset, and then we took a look at 2 trades. So go check out the replay here. Other than that, have a great rest of your weekend. Happy hunting. Make sure you hedge, and I'll be back with Monday's market outlook on Monday. We'll see you.